ability in your trading in 2025. Now, to add this indicator to your chart, you want to go to TradingView and then open any trading security that you like in any time frame. After that, you want to click on indicators and type in Comprehensive Trading Toolkit, and it's going to be this one by Big Beluga. Now, after adding this indicator to your chart, the first thing you want to do is double click on it so we can activate the divergences as well as the correction detection. After that, click OK. This is the Comprehensive Trading Toolkit by Big Beluga, and I know you may be thinking, what exactly is it? Well, it's a tool designed to help traders analyze market trends, identify potential reversals, and manage risk accordingly. Now, let's go over what this indicator is made of. Now, in order to talk about its functionality, we need to focus on its three key features: RSI divergences, correction boxes, and support and resistance levels. Let's start with RSI divergences. This section of the indicator at the bottom is actually an RSI indicator. The white line is the RSI line. It also includes most standard RSI features, such as the 50 level in the middle, the 70 level at the top, and the 30 level at the bottom. Now, this RSI section is used to identify RSI divergences. The indicator uses red and blue lines to highlight divergences. Whenever there is a bullish divergence, it will be plotted as a blue line, and whenever there is a bearish divergence, it will be plotted as a red line. When using this indicator to trade, you would wait for these divergences to be printed. If it's a bullish divergence, you get ready to take long positions, but if it's a bearish divergence, well, you're going to be looking to take short positions. Now, the second feature of this indicator is correction boxes. Now, you may be thinking, but what are correction boxes? Well, a correction box highlights a sharp price decline up to a certain percentage drop, which is adjustable in the settings. If the market drops by 5%, then it's labeled as a correction. If you lower this number to 3%, then a 3% drop will be labeled as a correction. These correction boxes are always displayed in light blue color. Since a correction is basically a drop in price, there isn't going to be a bullish or a bearish correction. It's simply a correction. Traders typically define a correction as a drop in value of 10% or more. This decline can happen over a few hours, a few days, or even stretch to weeks or months. This indicator visualizes corrections with blue shaded boxes triggered by the percentage decline set in its settings. These boxes highlight sharp price drops, helping traders identify significant market movements quickly and effectively. Last but not least, we have support and resistance levels, which can be identified by these red and green levels. This is a support level, and this is a resistance level. This indicator dynamically detects key support and resistance levels based on price pivots. When the price is above a level, it plots a green shaded area, indicating support. When the price drops below a level, it plots a red shaded area, highlighting a resistance. Over time, you will notice that some of the support or resistance levels have dashed lines, while others have solid lines. A support resistance level with a solid line is considered a strong level, whereas a level with a dashed line is considered a weaker level. Next, we're gonna go over how we can use this indicator to trade. But before we do that, let's take a look at the settings. As you can see, on the Inputs tab, we have support and resistance length with a default value of 30. This value determines how far back the indicator can go to detect and track support or resistance levels. If you have a higher value like 100, it's gonna give you the levels formed up to 100 bars back. For me, I'm gonna change this to 50. You can also change the colors of the support resistance levels. And then we have RSI settings, where you can set RSI length as well as your overbought and oversold levels. There is also a length setting for divergences, which I'm gonna keep it at the default value of 10. Now, for the correction, I'll maintain a value of 5. The Style tab has several visual options that we can toggle on or off. After you've made your changes, click OK. Now, how can we use the three features of this indicator to trade? These three features are divergences, correction zones, and support resistance levels. Let's start with divergences, and we're gonna combine it with correction zones to take some profitable trades. The first thing you want to look for is a correction zone, labeled by a light blue box. And then you want a bullish divergence to be printed after that correction zone. Now, a correction zone in itself indicates that after a sharp drop, price may later recover, but a bullish divergence divergence adds extra confluence to your analysis. Once we have a bullish divergence, we wait for the price to print a bigger bullish candle compared to the last few candles. This signals that the price may continue going upwards. We take a long position, set your stop loss at the lowermost low established during the divergence, and then you want to target a 1-to-3 risk-reward ratio. Now, this is a more long-term trade, so it eventually turned out profitable in our example. But that's just one of the methods of trading with this indicator. But there is another way. Now, for this second strategy, we're going to be combining support resistance levels with divergences. First of all, you want to identify a strong support level to take a long position. That is going to be indicated by a green level with a solid line in the center. Next, you want to wait for the price to establish a bullish divergence while retesting this support level. That means the divergence should form as close to the support level as possible, suggesting a higher probability of an upward movement in price. Remember that divergence signals are delayed by a few candles, usually 10 candles, but that doesn't change our conditions. Now, once you see the divergence, you want to wait for a bullish engulfing candle or a strong bullish candle before you take your long position. Once you have it, you take your long position. Set your stop loss under the support level, and then you want to target the next resistance level. In this example, you'll see it provides a decent risk-reward ratio, and the trade ended up being profitable. For a short position, you want to do the opposite. You identify a strong resistance level indicated by a red level with a solid line in the center. Once you have that, you identify a bearish divergence, which, as you can see, we have it here. Now, you want to wait for a candle that's bigger than the last few candles, which we have here. Enter a short position, stop loss above the resistance level. The take profit can be set at this support level at the bottom. Let the trade run. And as you can see, it was profitable. Ladies and gentlemen, this is the comprehensive trading toolkit by Big Beluga. It's particularly useful for traders looking for detailed and actionable framework to interpret market movement and plan their trades systematically. If you want to check it out, you can find it on TradingView. That's been it for this video. I really hope you found some value. If you did, remember to leave a like or even consider subscribing to stay tuned. Thanks for watching. See you next time.